Well, hello and welcome, and hello and welcome and hello. Bienvenidos a todos. Happy hump day. It's Wednesday, guys. Thank you for joining me on this very, very special edition of Un Poco Mas, the show where we give you just a little bit more, guys. Today we're going back to our roots. I actually bought a lot more SMCI. I bought a lot more Neo, and that turd was knocking on the back door of $5 and fell right back down to 4. Scoop more up, but my first love, sort of my entree to the U-turd universe, the fin-turd sector, was SoFi, and one of the guys that sort of gave me confidence on that was the big sexy Fred Flintstone, Steve Fiorio. He has a new article out, so we're going to go over that. There's another really good article on Seeking Alpha. I'm going to talk about why I bought a lot more SoFi shares yesterday. A lot of people on U-turd seem to think that, because I just stopped talking about SoFi, that I'd sold my shares, I was off the stock, or I'd been short this. Nothing could be further from the truth, guys. I have not sold my shares. I did sell some calls near the top, but I always do that. I kind of more trade in calls, and I hold shares long term. So I have, I couldn't even tell you how many, but I have like tens of thousands of SoFi shares. I'm long the stock. I'm going to continue to be long the stock. I believe they have superior management, superior business model. The growth in SoFi is like a steamroller. It's just absolutely unstoppable. And, they're reaching a critical mass with their membership. I think the whole thing was never about, these low margin businesses. I think it was about building up an ultra high quality affluent membership that then you can, sell all kinds of bullshit to. And not just you, but you can open them up to let other people sell all kinds of bullshit to them. So it's, the absolute best of both worlds. And, Steve's talking about, and everybody's basically talking about, if you want the valuation that you think the company deserves, you have to basically, get out there and, prove that this is really a tech company, that the banking as a service is going to be adopted by, other institutions. And people are very impatient, and I wanted Galileo to sell more and grow the membership more. And obviously everybody, I think, just keep it in perspective. 4 years. I mean, SoFi only went public about 5 years ago. Galileo and Technesis were acquired, I think, about 4 years ago. Think about everything they had to do. They had to integrate Technesis into Galileo. Then they had to integrate all that under SoFi. They had to integrate all of SoFi's systems, under Galileo. And then they're trying to go out and do all these RFPs, proof of concepts with, various customers. It's a lot. And Galileo was a relatively small business. But I think if you study the background of management with SoFi, as I believe someone as intelligent as Steve has, then you're going to see not only is Noto the guy, but Derek White's the guy. These are like all-star major league people that, came down to the minor leagues for some reason because they saw it. They saw the vision. They saw what SoFi is going to become. And remember, they've almost 10x their revenue since Noto took. I think it was like a $300 million company. Something I might be wrong, but it was way, way under $1 billion. It's actually been one of the fastest publicly growing companies, since they went public, believe it or not. The growth has rivaled companies like Palantir and CrowdStrike and some of these other companies that get, crazy valuations. I saw CrowdStrike, get hit a little bit, and I'm like, they're selling like $1 billion a quarter. They barely make any money. They're losing money some quarters, and valuation's $86 billion. All because it's high tech, high margin. Well, then if they're, then why aren't they making any money? I guess people say, well, they're fueling their growth. Well, SoFi is fueling growth and making money, and people are so disappointed in that, EPS guidance 25, 27. They always sandbag. If they're telling you they're going to make, 8 cents a quarter, read they're going to make 10 cents a quarter. And this is another good article outside of Steve's article. This one's by Toby Sheck, who I've only seen like once or twice. I'm really not too familiar with him. It's a good article. Just had an opportunity to read it. I also kind of want to try to explain what I'm talking about when I talk about sort of that short shift. There's just so many things I want to talk about. So if I haven't talked about the stock in a long time, one of my favorite stocks, one of my largest holdings. I remember, telling you guys I was selling some Tesla 450, 420, and I was buying SoFi back then. I was also buying SMCI, and I also just bought a bunch of NEO too. I mean, so those are three stocks I'm buying. I was also buying CRISPR. People are asking me what else I'm buying. I've also been buying the dip pretty heavily on Google as far as like the FANG stocks. Right now, Google, I believe, is undervalued, sort of vis-a-vis those other mega cap tech stocks. But anyway, that's neither here nor there. By the way, guys, it is un poco Moss. My name is Danny Deals. They've been known to call me Hurricane Lopez. They've been known also to call me Cornbread because I'm moist, I am doughy, and I crumble under pressure. They've been known to call me the Tugboat because I'm short in stature. I pull more than my own weight, and I'm rarely far from my home port. They call me Crisco because I am a little bit of fat in the can. Call me Little Danny Cornbread DeCarlo. I don't know what the hell they call me. I can't remember all this bullshit. But anyway, guys, so let me try to, and basically what I said to you before is you see the shift, right? When they're holding the stock down, you see a massive amount of shares on loan, far in excess, sometimes, double the number of shares that are actually sold short. So right now you see the opposite with SoFi because it's already made their move and they didn't resharp. By the way, guys, I've completed the SoFi Rock Opera. I haven't completed it, but I kind of need to crowdsource it. If you guys know the saga of the SoFi Rock Opera, when I was in a deep throes of depression, when they were, the five head and the, KBW, the third-rate mafioso turd on the, SoFi New Year's Day massacre, Michael Perito. Now he's been just funny. He got another, another hit on the stock from little Timmy Swiss Beats. Timmy Switzer from KBW, another rating down at 8. Like, seems like whenever they get a good rating, KBW, because, you had Jeffries come out and reiterate a buy, and then, this guy, Ken Shi from DBS, who's an excellent analyst, raised to 1850. And, some other analysts, Dan Dolev to 20, raising their targets. It's sort of like, there's not a lot of people in the middle, like right around the price target 13. It seems that they're either really low, like the bologna sandwich 5-head, or they're extremely high. But I think actually the bologna sandwich Wedbush, they get a couple of mentions in the SoFi Rock Opera. So it's sort of it's an emotional journey from sort of investing in, the SPAC and then the SPAC selection and my sort of contempt for Chamath and how we came out of that and how management reinvented. There's some, starts off, it's just probably the stupidest thing in the world. If I actually perform this, I'm even as idiotic as I am, the stupidest things I've done. I mean, I'm never gonna probably live this one down. It goes through, My Chemical Romance and the SPAC in the middle with you. It goes through some Billy Joel. What else is in there? Some Pearl Jam. We're trying to figure out how to close it. The greatest wrench in the history of the U-turd, fin-turd, even inside of the Canadian fin-turd mafia. The man's a legend. Great Naughty Lurker, J Money. Who else here? Mr. Premium, the options here. What's going on? Rocking the Nala hat, SoFi shirt. Let's go, man. I'm branded up, man. Nala, Anthony Noto pays me $1 million a year to wear this shirt, so I'm more than happy to do it. Naughty Lurker just consults me on all matters, shaved heads, all matters, balding, my receding hairlines, just telling me everything's going to be okay. And I believe him. Because he's okay. And, he looks like the villain from RoboCop, for God's sake. No, we all have Naughty Lurker. We're huge Naughty Lurker people on this channel because Naughty Lurker produced the show, and he's the best. I don't know if Alberto Berti Avilés is here, but if Alberto Berti Avilés is here, if he isn't here, we certainly appreciate him. And his fictitious nephew who stole our wrench and never came back. I believe he returned it without a receipt to Harbor Freight Tools. They tightened up their return policy a little bit because they figured out a lot of those guys buy an expensive tool, go repair their truck, and then they bring the tool back the next day. It's like, so this hydraulic floor jack, it's not working anymore? It's like, no, I just don't need it. All right, well, that's your policy. Yeah, so this engine hoist isn't seeming to meet your needs. And no, we're great. Just want my money back now because I don't change an engine every fucking day. Changing one engine, then I'm returning this. like there's a few things you can't buy on the internet, like an engine hoist, one of those. So cherry picker, I believe they call him. What's up? The great Dominic Hallbach is here. Pork chop is live talking. So the great pork chop is here. I do love pork chops. You got my number there, Dominic. What could pork chop be? I mean, they could call me cornbread. They call me pork chop because I don't know. I'm full of flavor, fat around the edges. I don't know. I'll have to workshop that one a little bit. But thank you for your comment, Dominic. I really, really appreciate it. The sentiment is well received. Oh, you stupid turd. Savage of Wall Street, the great Savage of Wall Street. Good to see you, Savage. How you been doing, man? Hope the options have been paying you and treating you with favor. Probably doing some vacationing in some luxury accommodations. Hope you've been well, man. Hope everything's going good. The great Colombian Kingpin is here, covering his mouth as he wants to do, and like he's smoking a fine cigar and displaying one of the best hairlines on YouTube. Welcome back, Colombian Kingpin. Hello and welcome. Hi, Katie. How you doing? Great to see you again. The great Katie Wentworth is here. Clap, my dog is here. He's not wearing any socks. I don't know how that information helps you with your investment. Great Nicholas Youngworth. Great Nicholas Youngworth. Whenever I see that name, Youngworth, it always reminds me of that young guy that they made that movie, like Johnny Depp movie about Blow. I forget what his name was, but it just reminds me of that name. I don't know. Yes, it's me. It's pork chop. What are you gonna do, man? Got a slow metabolism. Not really. I just eat a bunch of bullshit. So you know, it is what it is, guys. It is what it is. I love SoFi, but it's like. I mean, my passion for this stock is my passion is finding things that I believe have been unfairly valued and are just deep, deep undervalued. You know, when the stock all of a sudden I was just, harping on it every single day in the sixes, low sevens. And then all of a sudden, the stock just takes off. It doubles 15 all the way to 8. And I'm like, okay, I still love the stock, but I'm definitely not going to recommend people rush in and buy it 15, much less 18. I mean, because I know you're not going to get that crazy, stupid, Palantir valuation or whatever type of valuation because they think we don't have the margins. But we do have the margins. And I'm like, why am I not worried about this thing, even though the tech is not taking off? 2 words, ass face, gross margins. Gross margins. The gross margins are actually going up. And I think quarter on quarter is like 81, 82. I think it might have been up to 83% last quarter. What happens to a company that is growing like a fucking steamroller? The growth might not be dramatic, might not be like 50%, like an SMCI or an NVIDIA or even, some of these quasi tech companies, like the Palantir, everybody thinks is growing at like 60%, even though it's not. It's basically growing the same rate as SoFi, even though their margins are ultimately going to be better. It's expensive to grow an outside sales organization. I'm in fact not vacationing, clients and high, so money is right. Yeah, man, dude, same here, Savage. I've been working my ass off completely, hoping to take a little trip with Princess J soon, but man, it's been work. Still writing a boatload of cash secured puts and cover. That's the way to do it, man. That's the way to do it. That's how you make the money. You consistently write options. See, I do stupid stuff. I go and I buy calls. I put. Sometimes I make money. Sometimes I don't. Like SCMI, I made a ton of money, a couple hundred on the way up, and then I gave a bunch back at the top because I'm a dumb, fat asshole. Did anyone else lose their discipline through COVID when all these young kids came in, started all the crypto bros and all the, swinging dicks and, kids in their fan? I used to be an extremely disciplined investor pre-COVID. I never gave money back. Never. I'm like, just push in some more money at the top. You dumb. Ugh. Disgusted with myself. I think COVID made a lot of people just sort of less disciplined, maybe more disciplined in some ways, more regimented. But I think sort of everybody, it's the end of the world anyway. Fuck it. The asteroid's coming. It's like that Seinfeld where they think the plane is crashing and they're all going to die. And then all of a sudden, the plane pulls out. It's like, what'd you say? I don't know. Nothing. Oh, the great Alberto Berti Avles is here. The fucking guys, I'm so sick of all the politics. I don't think Trump wants a trade war with Canada and Mexico. It's very dumb. I mean, I understand the deal with China and I understand wanting to stop the flow of fentanyl. I get it. But, you know, if you're a master negotiator, then not every single negotiation should be a game of chicken. Because how you win a game of chicken is, you know, the other guy has to think you're willing to kill both of you. You know, and the other guy has to not want to die. So not every negotiation should be life and death, all or nothing game of chicken. And I understand these are very important issues. But come on. You don't need to crash the market for your buddies, the hedge funds, and buy the dip and leave me ass out in the cold, frosting my nuts in an igloo. Come on, Donnie T. Consult with Danny D before you're going to, make these radical announcements. You know, as you get a little Uno Mas, a little advanced heads up. Going to announce some kind of crypto reserve. Old Danny could use a tip. We'll decide a tip, huh? Numbers work. No, guys. Anyway, yeah, I completely agree. I don't really want to talk politics, but, you know, these trade policies, these tariffs, you know, interest rates, all these things, you know, crash the market, push the market up. So especially if you're going to be messing around with options, selling options, buying options, you know, you have to understand this stuff creates extreme volatility, and it's great if you can kind of see it coming and make it work for you. But really all you can do right now is just expect the unexpected. You know, but I think all this stuff's going to be salvaged. I think that's just how Trump works. He goes in like a wrecking ball, and he kind of throws everybody off balance. I don't know. I said this last time. I said, just don't overreact. Just don't assume we're going to be, you know, in some kind of a, you know, hot war with Canada anytime soon, right? It's all rhetoric. It's all rhetoric. It's all posturing. It's puffery. And at the end of the day, the United States, you know, is going to get a much better deal on trade. But I don't know. This is the same trade deal that Trump signed himself with Canada when he was in office last time. It's like, well, who signed this? Like, well, you did. So I don't know, but I guess different people in the administration, different goals, whatever. But I just don't. Nothing I'm seeing right now is the end of the world. Nothing has really changed that much. I mean, yeah, you have these tariffs on. They're talking about they might take them off tomorrow. So I don't know. I'm just not one to panic. Like everything sort of in my mind has a way of working. So and if it doesn't, it's the end of the world. We're all going to hell in a handbasket anyway. Well, what's the diff? Clap my dog votes to the rock opera. What's going on? The great Not a Lurker, the great Rumi. Yeah, I'm just trying to make a Neo video, but the stock just keeps shitting on me. Like I really want to pump the thing. I don't want to talk about lack of deliveries. I know with Onvo, the swaps are going great. I mean, what are they doing? Like 100,000 swaps a day with only 700,000 cars on the road. Everyone loves swap. Neo took the most gigantic, insane risk. Everyone thought they were crazy. Nobody could make swap work. And they've completely proven the concept to the point of, you know, CATL is down there saying, hey, we're going to have 1,000 stations by the end. Their network is vapor. It's vapor. It's announcements. It's just up on a stage. I mean, and I know they're going to build it, but it's years out there. This first mover advantage, it has to mean something. Usually if you take a gigantic risk and you're right, and you combine that with execution, the market rewards, but the execution has not been perfect. Building out swap's been great. The function of swap has been, it's all great, but they're just not moving enough units. And the margins are suspect because they're not moving enough units. Huge rollout problems with Onvo, sourcing, supply chain. I mean, honestly, I don't know if Neo's been ready for prime time. I love the company. I just bought a bunch more of the company when it fell back in the early fours. I think management is finding their footing. And I think it's going to be a huge winner long term, and that's what I'm looking for. I think the same thing about SoFi. T-Swizzle, Little Timmy Switzer hit us again. Remember, KBW was, you know, sort of the impetus, sort of the hitman, sort of the, you know, Chuck Norris, Charles Bronson, you know, kick you roundhouse kick right to the face on New Year's 2 years ago when SoFi fell like 30%, just fell off a cliff. That was the Pitbull, Michael Perito, the third great balding mafioso. He's since moved on to greener pastures, and the former lead singer of My Chemical Romance, Little Timmy Switzer, He had a lip ring back then. If you don't recognize him, his hair was, and he had, eyeshadow, all that stuff. But he was kicked out because he was spending all his time analyzing financial statements, never writing lyrics, never showing up to practice on time. It was quite a scene. But anyway, I don't know what the hell was I talking about. I was talking about SoFi. Yeah, I'm going to go over this, but I just wanted to, like I said, I'm very long-winded, very all over the place. Let's take a look at the chart, because this is what I think. I think this is just about to pop. Right here, it's going to pop. Right there. It's coming into this nice little, I know it's a loose flag because it kind of comes in two parts. It comes here, legs up, comes back. But it's right back here, kind of the same. It recovered right here to 1330, very close to this 1360 at bottom out before. And if you notice, the last place you had a little bit of consolidation right there on this run, where this run basically flagged out, was 1350. So I think this is a very critical level for it to hold. I don't really, this candle doesn't really bother me because it did find this sort of downward support half of this, little flaggy flag. And I just think this thing's primed to just leg up again. Huge. It's going to be huge. But we could go over the chart in some detail, but it doesn't, it doesn't really matter. But it's basically, I think it's double tested off this line. I think the valuation is just way too low. But look at what happened with the SoFi short versus shares on loan. So this was all the way up to 300 million. Okay. Right before the run, say in September, 216 million. That's gone from 216 million in like 6 months down to 80 million. It's a third. Whereas the short has only gone from like 180 down to 133. So you could see how that ratio is just totally out of whack. And it makes perfect sense. Why do they borrow shares? I mean, they borrow shares to short the stock. They borrow shares to be bearish. They borrow shares to step on the stock. And then, what happens like after the move, even though it's come down, there's been some selling. The swing turners sold. I think a very few institutions sold, but they haven't really reshorted to that extent. So now contrast that with NEO. Contrast that with Supermicro. I mean, NEO shares on loan are still 400 million to less than 200 million. So it's shares on loan are double. Did you see that whole swing with SoFi? As this starts to swing, and this is what we're starting to see. Just look at the last 2 weeks. Okay, on 14 February, there was 120 million shares on loan. So it's down over 20 million in just the last 2 weeks. Short interest just went absolutely freaking insane through the roof on NEO, and they were shorting from the low fours. You say, can you prove it to me, Fat Man, or am I going to need to call Jake? You guys remember that show, Jake and the Fat Man? Oh, what a great show. Is that the same guy from Maddox, whatever that other show was? Anyway, so if you look at the settlement, this is settled end of January, and then the last settlement date was mid-February, released on 26 February. So they were at 152 million shares sold short. That jumped up to 200 million, a 31% increase from the prior reading. Haven't been back to those levels since last November into December. Now, how do I know they were shorting from the low fours? Well, it's quite simple. This increase of 50 million shares sold short, it's like selling seashells by the seashore, that kind of a tongue twister, or a titty twister if you prefer. So that all happened between the 1st and the 14th of February. Now, what was the stock doing? Let's just take a look at the monthly. Okay, between the 1st of February, it's like slightly back, the 3rd. It starts on the 3rd, but you could basically, oh, this isn't even the right chart. Why am I even talking about NEO? Okay, I'm supposed to be talking about SoFi, but take my word for it that NEO, basically on these 2 weeks, the stock was running in the low fours. So they were shorting from like 410, 420, 430, shorting 50 million shares. Doesn't make any sense. But that's my point. This thing is primed to make a giant move up. They just completely on the wrong side of it. China announcing majors. Now we might be in a hot war soon. Looking like they're really itching for a hot war. And the great Donnie T, he likes to push buttons. So the Chinese don't like their buttons pushed. They're like, don't try to intimidate us. We're Chinese. I don't really know what that has to do with anything. But again, just look at Supermicro. Same basic deal. Shares on loan are way higher than the short interest because this stock has been suppressed and it hasn't even come close to making its move. 60s wasn't the move. Look at the last 2 weeks. Went from 184 million shares on loan down to 140. You know it's setting up. Short interest says it's coming down. This is hogwash. This is hogwash. Look how far Ortex was behind. Right when this was published, they had this at like 93. They're 10 million shares off. 10 million shares off. Last two reports, last 2 months, we had a 19% increase, 11% increase of short interest. So if they're borrowing most days, I don't know why they assume that shorts come back down by 10 million shares. I think they're way off on that. Way off. But we're going to get back into, Supermicro and doing it. I'm just so bored. That was like how I got bored. But it has come way down. I actually haven't, I increased my position massively on that. Massive increase on my position. Let's see what this one's going on. Sorry, guys. Uno momento. Oh, never mind. Just checking the security cameras. Merely a delivery. Merely a flesh wound. Merely a flesh wound. But anyway, so you can see, guys, that's how it shifts. And you can see how extreme it was with SoFi. Basically going from... because that's on 3 months. Sorry. If you look at this, it shifted from, 300 million shares on loan down to 80. And the short has come way down. So I think SoFi, they're not going to suppress it much beyond this point. I mean, institutions are coming in. Let's see what the actual institution. Anyway, let me go through these articles. You don't need to hear me drone on like a psychopath. But if you guys want to hear the SoFi rock opera, The Great Naughty Lurkers by Rocket with Def Leppard to sort of close it out. But it's because the rock opera is supposed to represent sort of the range of emotion. Right now, like we rocketed, but then we're sort of, falling back down to earth or whatever you want to call it. So it just seems ridiculous that, I wrote the SoFi rock opera. I made an effort to write the SoFi rock opera and to never perform it would just be the ultimate sin. As you can see, I buy way too much shit off of Wayfair. Wayfair, you get just what I need. Got a bunch of shit we don't need as well. So anyway, I'm not even logged into Fintech, so I'm not going to mess around with it. But let's go through the big sexy Fred Flintstone, Stephen Fiorio, his article. It's like Stephen Fiorio is like if you put a genius level intellect on a bulldozer. Just like there's a force of will to his investments where, and he was even, I think, playing SMCI around the, the filing. And it went the other way, but I have a feeling Steve played it better than I did because he's just a lot smarter than me. The man wears suits. The man's an executive. His haircuts. Appropriately dressed. Business casual. My business casual is a SoFi shirt. Emilio Aguirre, Savage, not sure I do that, to be honest, what it stands for. I can't pay off the month. You guys are savages running a clinic down here in the comments, but, check out his channel also. You guys know Savage of Wall Street has a YouTube channel, all kinds of stuff on there. So go out and check out his channel, subscribe, like, all that fancy bullshit. So this is where it kind of gets you because Steven has been a Super Bowl for a long time. Not the Super Bowl like that. Yeah, I got to take off this freaking hat. So hot. Call me mini water. Anyway, guys, hello and welcome. Welcome and hello. Hello and welcome and hello. Hello and welcome and hello. Those of you who are joining me just a little bit late, you shouldn't miss out on a proper greeting just because you're tardy. Let's say hello, welcome, and hello. Hello and welcome in the words of my godmother, Gail King. Hello and welcome. Anyway, guys, it is un poco mas, the show where we attempt in vain to give you just a little bit more. Well, let's go over sort of what Steven's talking about. This is, I'm sure you guys know this. You follow this stock very closely. The Canadian FinTech Mafia has been doing outstanding SoFi coverage as always. They're, covering a lot more like Robinhood PayPal, all these other stocks, which is great. So SoFi must enhance its business banking and provide more clarity on tech. I don't know why we don't have. I can understand why full suite of options trading is difficult to get done, but I don't understand why it's so difficult to get business banking. I guess that's waiting on like FDIC or not FDIC, but the whatever department that's Office of the Comptroller. Remember when Dennis they were trying to get a bribe, running for like District 5 Comptroller, Always Sunny in Philadelphia. Call this nerds. So SoFi, impressive growth, member count. We all know about the growth. The growth is always there, but it's a technology that's holding up the value. If they're just valued on growth, just valued on their gross margins are incredible. And they're scaling nicely. So, people are so worried about the guidance versus, trying to hit, that 55. I think they're going to be well over the 55 cents next year. I think they're going to be closer to $1. This article, this guy, Toby Sheck, he's saying 76 cents, and he's obviously way smarter. I mean, the guy's got a big square jaw, got a big bull head. The guy's got head of hair like a Nike swoosh. Got to know something. Nobody knows nothing. Like you do, Bobby Lupo. Anyway, guys, I have no idea what I'm talking about on the show. Let's see. Who are all these people? God, the great Javier. Sell right, never buy. Yeah, no, you're absolutely right, Javier. Like sometimes I just want to play the runs for a little bit of leverage. I guess MCI, it worked out extremely well, but sometimes it doesn't. So yeah, you're absolutely right. In the long run, that's options writers win. You write options, you win. 70-80% of the time, just depends where you're writing them. But if you're smart about it and you're disciplined, you're not trying to hit home runs, and you take profits, and you control your losses, mitigate your risk, and all that stuff, you are definitely far better off collecting premium than paying premium. Because most of the time stocks don't make radical moves. Most of the time stocks kind of trade sideways. So, you want time decay to work for you, not against you. So I would say that is absolutely sound advice from the great Emilio here. Reversal trading king. POTUS going to take a wrecking ball. I mean, Jeremy, he already is. He's taking a wrecking ball. But that's the idea. That was the idea. That's what he ran on. Like government's bloated, government's broken, government doesn't work. We're going to cancel off foreign aid. It's kind of what he said he was going to do. Just a lot of people didn't think he was actually going to do it. So. But I'm not shocked. What's up with SMCI? It's just bottomed out like 35, came back up, was trying to break through 40, 42. I think it's sitting about 39 right now. Try to make another video on SMCI later. Try not to get too sidetracked because I have hyper super ADHD on steroids, so it's hard to get it through. But so I'm going to go back to Steven's article. I've been a SoFi technology Super Bowl for years. The in-depth due diligence I have conducted allowed me to remain bullish during a time when the largest profit center was being hamstrung. And that's part of the SoFi rock opera, is how student loans got canceled. I think I go into live. There's been a rendition of Lightning Crash. It's just so bad. And I'm not a good singer at all, just at all. So that's part of me doing an opera is, I am overweight. A lot of the male opera singers are fat. So got that going for me. It's nice. Anthony Noto and SoFi team defied the odds, pivoting in the face of adversity to transform business, student loan refinance, cutting-edge fintech, offering a one-stop shop for personal finance. It's going public. Shares of SoFi exceeded $20 several times bull run in 2021, remaining in an elongated bear market in the fall until the fall of 2024, despite people's opinions about SoFi's relevancy in 2024. SoFi's member count exceeded 10 million mark. You guys know all this stuff. Adjusted net revenue grew 26% year over year to 2.61 billion. Adjusted EBITDA increased by 54.17, which is incredible because, again, the gross margins, the EBITDA forebode, foretell, forewarn, forlorn, quoth the Noto, nevermore. they're basically telling you this company is going to be a cash flow machine in the future once they scale year over year to 666 million. Mark of the beast, nothing to worry about. SoFi continues a string of outperforming its guidance and expects it will generate at least 23% adjusted net revenue, 20% adjusted EBITDA growth. You guys, you know all this stuff. Basically, this is the part that he's talking about. The key differentiator between SoFi is that the technology side of its company owns the entire back end. Long-term plan is to license its platform to financial institutions, upgrade its platforms to a vertically integrated cloud platform. In order for SoFi to be valued as a technology company rather than a bank, it needs to deliver on its banking service platform. I believe there's a lot of upside to be unlocked, and I'm afraid the shares will continue consolidating around the 15 range. So, okay. I mean, a lot of people wouldn't be too upset if it consolidated for a bit around 15, because last time it was consolidating was more 6 to 8, 6 to 10. So there's nothing wrong with consolidating at $15. My personal price target right now is at $21, but you'll see more on valuation next article. Following up with previous articles. Previous article was way back in November. You guys know I always do SoFi. Since then, shares appreciated by 9.46% in the sort of a straight line method. S&P has only increased by 0.7%. So SoFi would, he thought SoFi would continue higher, reaching a 52-week high of 1842 before retracing, settling around the $15 level. Of course, since then, market's been dragged. Risk of investing in SoFi. You guys can go through the risks, regulatory, all that stuff, financial service competition, technology, doesn't get the RFPs, all this. We know all the risks. SoFi posted a great quarter, strong year that I believe set them up for future growth. This is what I'm telling you. If all these things aren't going right, technology isn't going right, like the economy's not going right, we're not getting the rate cuts, so home loans aren't coming in, student loan refis aren't picking back up, how are they still doing so well? Because the growth goes on like a steamroller, because it's a self-sustaining economy. Everybody wants their loans. Consumers want to get loans from it. Everybody wants to buy their loans. Their loans on the secondary market are just absolutely crushing it. If you go back to this, right here. So this is the securitization. So SoFi issued 697 notes secured by a pool of personal loans originated by SoFi. The transaction, listen to this. I do these all the time, guys. This is how I finance my coffee and my Danish in the morning. It was a co-contributor securitization with collateral consisting primarily of loans previously placed with the SoFi loan platform business partners. So SoFi's loan platform business originates loans on behalf of third parties, generated 2.1 billion personal loan volume in 2024. This represents the first securitization of new collateral in SoFi's consumer loan program since 2021, and the first using collateral originated by the loan platform business. It provides co-contributors with meaningful liquidity to support their ongoing investment loan platform business with strong market demand for SoFi personal loans. Issued notes 35 investors. The transaction closed February 25th, consisted of 4 classes of notes rated by Fitch and Morningstar, DBRS from AAA to BBB+. Fitch ratings assigned ratings to all 4 classes of notes, and Morningstar DBRS provided ratings on the class A, B, and C notes. Listen to this. Goldman Sachs was the structuring agent and joint lead book runner with Bank of America. Goldman Sachs and Bank of America are selling our paper. Listen to this. The transaction priced at industry-leading cost of fund levels. I don't even know what that means, but it sounds really, really good. Now, I kind of do. With a weighted average spread of 87 basis points and an all-in yield of 5.1%. And, of course, the notes were offered pursuant to Rule 144A under the Securities Act of 1933, as amended. As amended. Don't forget that. They amended that bitch in 1934. Okay. Since the launch of SLSCLP in 2015, SoFi has issued more than $12 billion in notes to investors across 25 transactions. Member-centric, we all know that. So this is extremely important because this represents a shift in the company to higher margin businesses. That's what the loan platform is, a fee-based platform. They're not having to hold loans on the books. It's far less capital intensive, so you get more return on your capital. It's better for the business. You make more money without using your money. That's essentially what it is. So the great quarter, great growth. We don't need to go through all this, but we sort of know what's going on here. You can see the growth is just completely, it's not only incredibly strong, but it's incredibly consistent. As SoFi is built for all weather conditions. SoFi is built to withstand down market. Now, some of these companies and some of these other fintechs, if consumers aren't buying, what happens to an Upstart? What happens to an Affirm? If crypto's down, if there's negative savings, what happens to a right now? I think Robinhood's going to be okay because they're really doing well. I mean, they're diversifying their business quite a bit, but I still think SoFi is built far, far better to handle the downturns with their banking charter, their lending. They have just a lot more options for different businesses they can go into to weather these storms. When rates were high, they grew their membership, offering high savings rate. When rates go down, they're going to grow the loans tremendously. So, and that's going to be very, very good on the front end with the fair value account. They originate the loans, they realize a lot of the profit, blah, blah, blah. The five-headed bologna sandwich will tell you how that's all a fraud too, but it's not. When I look at the loan book, total originations increased by 66%, 2.8 billion year-over-year. Quarter of personal loans exceeded $5 billion for the first time. Student loan or it says organizations. I think it means originations exceeded $1 billion for the first time since Q4 2021. Home loans exceeded $500 million for the first. It's growth, growth, growth. That's what I mean. It's like a steamroller. You can't stop it. It doesn't stop. It just keeps going. It just keeps growing in all conditions, in all economic conditions, in all times, in all administrations, through the fear, through the FUD. SoFi keeps growing. Management keeps executing. Business models barely had a chance to work. Cross-selling is going to increase, but more importantly, cross-selling to these sort of high-margin, fee-based things that we're just seeing get going. But they're so easy to build because we own the back end. It can be built quickly, efficiently, for almost no cost. It's all out in Utah. They can't have caffeine. They got to buy alcohol at these government-mandated liquor stores. All they do is code, shave their heads. You got an auto worker out there shaving heads. You got Derek White getting IDs. You got two bald guys in charge, one in Jersey, one in Utah. That's what you need. Look at Bezos. Old guys in charge everywhere. DT's not bald. He's probably the best comb over in the game. This allowed SoFi to produce $2.61 billion in revenue and $666 million adjusted EBITDA in 2024 fiscal year. SoFi grew its revenue. We all know all this stuff. Something I always discuss is not allowing personal opinions to sway reality. I personally do not use SoFi as my banking platform just because I'm not using it. Doesn't mean it's not a quality product. It's not my main bank. My main bank, quite frankly, is Chase still. I use Bank of America. I use US Bank. I do use SoFi. But I use a lot of banks. I have dozens of bank accounts for business, different stuff. So I got to use a lot of different banks, landlord, tenants, clients. Just, it wasn't all my choices. I was born into it, guys. I was born this way. There's nothing I can do. Like Lady Gaga. If a financial or her brother Gary Gaga, if a financial platform doesn't provide value to its members and likelihood of members growing 34%, is slim at best. SoFi's membership hasn't declined on Q1Q basis. They've been adding at least 500,000 new members since Q2 23. The amount of capital deposits on SoFi platform has exceeded $25 billion, which is 39.51 larger than when SoFi ended 2023. You know all this stuff. Why I am most excited about SoFi in the coming quarters. Q4 conference call, we were in that SoFi agreed to initial terms throughout capital. So this is the loans. This is buying loans, a huge deal for Owls, a major player in private credit. This is expansion. This is SoFi in the big leagues. This is SoFi, moving paper to the biggest player, some of the biggest players out there. Announcement Owl. I'm very excited about SoFi's ability to expand its new products, drive fee-based revenue from these opportunities. We already talked about a little bit of that. Believer in technology platform being a true differentiator for SoFi in the future. The tech platform feels as if it's stalled out. As it was much larger financial services, the technology platform generated $85.65 billion net revenue. Financial service was $64 million. Since then, the quarterly revenue for the technology platform has only increased by 20% or $17 million. Financial has increased by $191 million or 300%. So, here's the thing, guys. I don't care if you sell, widget. Hold on one second, guys. I'll be right back with you. Sorry. Someone's at the Sorry about that, guys. That was just my parole officer, Alhavaccia, doing a routine check. Everything's good. Got my pants back on. We're good to go. To do a little cough, turn your head to the side. It's all routine, all very routine. Let's see. Additionally, technology. So, guys, we know a lot about this stuff. Where I believe SoFi is missing the mark and what can add value. We already talked about this. So the lend business segue into their asset management realm. SoFi already has proprietary ETFs and mutual funds. They earn a management fee. This is going in more fee-based income. And again, I'll let you guys read this. It's a really good article. I read the whole thing. I'm going to read it again, but it's a long article. Talks about Palantir. Invest in that. I believe it's still. I also believe Palantir still. Palantir. I mean, nobody wants to say it, but that run was a pump and dump. That run was a huge pump and dump. I mean, it's going to lose like half. I mean, SoFi. You could say, okay, pump to 18, maybe coming back toward 12. It's losing a third, but I mean, that Palantir run was extreme. And I think it's very difficult to price in 10 years of perfect execution and assume there won't be any competition, assume this is what AI is going to be, this is how it's going to be structured, this is how it's going to be presented to clients. Nobody's going to be able to compete with you. Nobody's going to be able to offer these things. And then the military business, I don't even think it's going to be that big, honestly. I don't know. I like Palantir, but you have to look at valuation. It's like, that's why I stopped hyping SoFi so much. I loved SoFi at 5. I loved it at 680. I loved it at 740. I'm not going to tell you to buy it at 18. I mean, I'd be very happy to tell you to buy it here, but I can't tell you what to do. What good I do I tell you? You don't know by now anyway. Yeah, Thomas, I don't think it's going to get to 50. Mid 60s, I'd say you'd be doing quite well. What's up, C-Bar? Great C-Bar Engineering. I thought C-Bar was Chinese for a long time. So like CM Chang. I was saying Chang, but it was like saying chemical engineering, I think. Did I mention I'm stupid? Yeah, OT Noki. Does that say I'm eating Noki 89? Palantir's price was ridiculous. Yeah, it's a lot more reasonable now, but it went down like what, 60, 50 bucks, 50 bucks. Not a Lurker is playing Nvidia. Not a Lurker playing Nvidia. Good for you, Not a Lurker. Chris knew what you were talking about. BBI went almost 10, pulled back under 5. It's gamble. And my play account cost the average 69. Premium bought that average down. Google Beach Slayer. Sometimes you put out drink filter, tap water, everyone, mechanical engineer. See, this is somebody with a brain in their head. I'm poli-sci. Let's take a look at just one more article, guys. I'm going to get you out of here. I just wanted to just talk a little bit of SoFi because not only Steve wrote another article, and I always really like Steve's. Nobody does due diligence like that. Like I said, it's like you mixed a genius with a bulldozer. That's how I look at Steve. He was a power lifter. They were talking about that with Tanner. Not surprising. Certain personality to power lift. Very, very, very disciplined. Very routine oriented. Details. So anyway, this one's by Toby Sheck. CEO's upgraded guidance supercharged. A lot of people sort of miss this subtle upgrade. I think Noto's always sandbagging. So Noto suddenly raised 2026 guidance at BofA conference over 20-25% CAGR, 2023 to 2026. He was saying 2025 and 20% MPM, 20-30% ROE in the long term. I estimate SoFi will deliver 76 cents EPS 2026, given the upgraded guidance, very close to the high bar of EPS guidance of 80 cents. So very, very close to their high end. I rate SoFi stock strong buy, $19 price target based on 25x forward 2026 price to earnings, considering strong guidance track record. My price target could raise to 23 under a blue sky scenario. So far, share price been weak after the release of Q4 results 27 January. The price has fallen almost 18% in 2 weeks. Recent rebound last week. It's kind of faltered again here with all the turmoil. Q4 2024 results delivered a double beat in revenue. Getting a lot of beard dandruff, guys. All right, that's better. I was disappointed in 2025 guidance, worried about whether 2026 guidance is still relative. The CEO, Anthony Noto's latest Q&A being slightly raised guidance for 2026, 20% ROE target and over 50% revenue contribution to fee-based business reinforced my confidence in SoFi being a financial technology company rather than a traditional bank. I rate strong buy on SoFi. My base case price set at $19 based on 25 XPE and EPS estimate 76 cents ish. Or no, per share. I mean, that's not ish, that's per share. In 2026, things turn out to be stronger than my estimate. I'm looking for $1, folks. I might be creative. The revenue is going to grow, and you're going to get huge marginal profit. They've reached that tipping point. They've paid all the fixed costs. They've paid off everybody. They've bribed everybody they have to bribe. They've paid off all the hookers. They paid for all the dead hookers in their trunk, all the mistakes, the skeletons in the closet. I believe SoFi has huge growth potential. The recent share price weakness offers an excellent buying opportunity. Take a look at the results, 2025 guidance. 24 press release, 2025 is the best year SoFi has ever had. And he's indeed correct. And it's the best hair any CEO's ever had. I'll say that about my biological father, Anthony Noto. He's indeed correct. You look at SoFi's double beat. Q4 2024, adjusted revenue grew by 24% year on year. Beating consensus estimates 11%. What is that? 11% growth versus 24% growth. It's more than double. Think about it. Think about it. Adjusted EPS reached 5 cents, taking a full year adjusted EPS to 15 cents, which was 30%. Everybody was saying, hey, it's going to be 10 cents tops, 8 cents, 10 cents, 12 cents, 30% ahead of management's guidance of 11 to 12 cents. That's a big beat, man. I know it's small numbers, big beat. It's like you and the motion of the ocean. It's not your damn. Never mind. Therefore, it's hard to believe the rational investor would dump SoFi shares on the back of these amazing results. So, what's triggered the share price collapse? Since the ER, likely culprit is SoFi's conservative EPS guidance, which management expects to be 25 to 27 cents, representing 73% year-over-year growth. I recall that management's projected EPS 55 cents to 80 cents 2026 during the Q3 earnings call is up 3. So this would be more than like 3x higher than the 2025 guidance. Big contrast, like we fuel investors feel like, how can you get there? Is it concern overdone? Management has a strong record of beating its guidance. They always beat guidance. So for management, 2024 management has raised earnings guidance twice compared to actual adjusted diluted EPS original guidance. Actual EPS was double. Looking at the earnings surprise data collected by Seeking Alpha, there was only one earnings miss out of the last 12 quarters. One miss in the last 12 quarters. This suggests that management has a strong tendency to give conservative. You think, Tony Sheck, what the fuck? We all know that. Therefore, it is not unreasonable to assume 27% adjusted diluted guidance would have been under guide. Anthony Noto suddenly raised guidance. We just talked about this, 2025. So he went from 20 to 25 to more than 2025. More importantly, we have more confidence than ever in our 2026 EPS guidance, 55 to 80 cents per share. Great investor skeptics. She said, we believe we can drive 20 to 30% return on equity as business continues to scale and matures. On Marge said, we believe our EBITDA margins long-term are 30%. Our GAAP net income margins long-term are 20%. These are great margins. And he said before he thinks 20% is just, conservative starting point. By using new guidance estimates, SoFi is going to be 76%, close to high bar of 80 cents. Not a traditional bank, technology platform, financial services will soon. Okay, but this is the kind of the trick they do is they put technology with financial services and shouldn't really be together in my mind, but it makes it look better. So let's do it. It's like me wearing black or vertical stripes. Like, hey, maybe if I cut the sleeves off the shirt, it won't look so fat. People notice I have a little bit of muscle in my arms, honey. If I swing my tricep fat right up against my man boob fat just right, it looks like it might be muscle. Nobody's going to believe that's muscle, honey. It's a big bingo wing. Thank you, dear. Can you see my keys? No, you fat fuck. You can expect our fee-based business revenue to continue to increase well over 50% of our total revenue. We've seen traditional bank have 50% of revenue coming from fee-based businesses. This could be another evidence suggesting SoFi is not a traditional bank. 20-30% ROE is nothing a traditional bank can achieve. SoFi's ROE was 8.5%. 2024, everything Anthony Noto. Let me see who this is. Hopefully it's not a lurker. Yes, it is indeed. SoFi and Spring reached 13% in 2026. Chart below shows Wall Street banks ROE ranging from 6 to 17%. We look back to 2025. The highest ever recorded ROE was 22% by was 22% by Goldman Sachs in Q3 2021. Higher than 20% ROE has only happened once in the past decade. That suggests that 20 to 30% ROE is well above the norm for traditional banks. SoFi should be valued as a high growth fintech. This is what I mean. Like, this is stupid. This is stupid. And, SoFi's multiples are just really, I think, suppressed vis-a-vis their growth. These other companies, banks aren't growing. Most of them are shrinking. So anyway, you guys can read all these charts. Downside risk by buy recommendation. SoFi's earnings include my buy recommendation. SoFi, based on my belief, the market has mistakenly sold off stock without much considering management's track record of guidance and investor expectation. Of course they have. They always, but they're not shorting it. They're just selling it off, which I like better because I don't believe they're going to, try to knock it back down the single digits. I believe it's going to leg up. I already showed the chart. I believe the latest EPS guidance, 27 cents, way too conservative. My estimate is 40 cents. SoFi continues to be consensus. Q1 and Q2, I believe the market should regain confidence. 2026 EPS guidance, 55 to 80 cents. In addition, CEO Anthony Noto's long-term current equity target 20 to 30% could also be a key re-rating factor as the market sees improving ROE and start believing SoFi is not a traditional bank, but more of a high-growth financial technology company. So, guys, that's pretty much the story. We got the great Chris here. Not a lurker anymore. Get out not too far. He needs to not be antisocial. All my customer accounts. So that was my travel area. I'm not antisocial. Good to see you. God, great to see you, sir. Misrolling my R's. My beard hair got caught in my mini water cap. 110 people, and none of them are entertained, guys. I was going to do a musical number too, but it was for some guy, Roger. I don't know. People are now emailing me asking to do musical numbers. People have figured out my past. Never been much. Any thoughts on price action before next earnings? Steve's saying languish under 15. I think a lot of it just depends. Interest rates, overall economy, but more than that, sort of what are we seeing out of Galileo? Are they actually able to increase the customers, any big accounts, increase revenues there? But quite frankly, if they increase this fee-based income a ton on the loan platforms, different platforms, I don't care where it comes from. High margin revenue is high margin revenue. I don't care if it comes from Utah, New York, San Francisco, or, right out of, it just doesn't matter. It doesn't matter if they, don't get everything they could have out of Galileo and Technesis and the rest of their business explodes and they make a ton of money. Nothing's perfect. You don't make perfect decisions. I still think Galileo is going to go. I just think companies have been very cautious to make these big investments. Remember, this is something that takes years to really land this account and get it set up, but it takes decades. They're gonna have these accounts for decades. You're not going to revamp all your technology and then change it again anytime soon. That's why these RFPs, proof of concepts, take a couple of years, because it's a huge, expensive decision that there's no take-backsies on. There's absolutely no takes-backs, backtracks, no takes-back. 10X still goes looking really good. We just need some data. I think we're going to see they're looking for P3 data anytime. Remember, the deal is just this 6-minute walking test on 10X. They're just looking how far you can walk. It's only a 12-week, 12 weeks you're on the medication. So this P3 is well underway. We could see readout anytime. I mean, if it's really good and it looks like FDA is a layup, this should be like $1 billion company. At least a couple of times, forward-looking sales, which I think will be a couple hundred million. I mean, a couple hundred million to start. But I think sales on this thing could, Lavasa Menden, or however you say it, could go up to $1 billion. There's no other product for this type of heart failure that improves quality of life, improves functionality, all that stuff. I wish we could go to the moon, chart of travel. Looks like we might be going to Mars. Guys, I'm out of water. When the water's gone, it's time to move on. Anyway, Guys, it's a SoFi stock sitting at $13.42. My price target's $21. Am I strong? I wouldn't say I'm like a strong, overwhelming buy at 30. I mean, remember, new just, 16, back to 10, back to 14, back to 10, back to the back again. It's like, was that missing misdemeanor Elliott? I don't know. I think it's a fine entry point here. Would I rush in to buy it? Could you see some pullback? You could. I don't know. What is this for? Let's see. I'm not sure who that is. Anyway, guys, so yeah, I don't know. It's like a neutral point because this could continue to just trade sideways and kind of like hang around here between, sort of this 16, 12 and just kind of bleed down as SoFi did for a few years. I think it's going to hit this wedge, which really comes to a head either, March 19 or worst case, April 14. And I think it's either going to move up strong off of 1340 or very worst case 1075. I hope we don't see that, but we're seeing consolidation back down here around 11, more consolidation. That's kind of the beginning of the run. So it's a little bit of a stair stepper. Whatever happened to stair steppers? People just on elliptic. I think too many people were maimed on those actual stair steppers. The great Paul Gardner has joined us. What's up? I love your work on the Rockford Files. Thank you for joining us. I don't like your wedge drawings. I don't like them either. Let's see. See, you don't like my wedge drawings. You should see my chonies. Yeah, it's not much of a wedge. I mean, it's really all over the place. Maybe a loose flag. I don't know, loose stool. We bounce either way, but end of the inning is Billy Jack's here, the great Billy Jack. The wedgie is here. Paul is here. We can start now. The great Paul is here. Let's see. BW, you are neutrally buoyant. I am very neutrally buoyant. You pushed me down like a submarine breaching when I ran over that Japanese fishing boat. Sup, G? We got the super secret ninja me. What's up, super secret ninja? It's not a secret. You put your name in the comments. Yikes, Harinala, Arkansas Kid is here. Billy Jack, the Arkansas Kid. Big man who can cook. We love that here on the program. 109 people. Still got my Nordic track. Richardson. Dude, when I was a kid, man, my parents had me doing deal a meal, fit or fat, all that shit. Yeah, I remember I was going to this fat kid program, and it was just me and a bunch of housewives. I think I was 8 years old or 9 years old as a little kid, playing bass. I was a good athlete too. It's just I've always been fat. It's weak. All my brothers, they're all thin. They got eat Twinkies and chicken fingers and have six packs into their 40s, little fuckers. My one brother's like a fucking male model. You, bro. Yeah. No, I love my brothers. I don't hate them just because they're fit. I mean, I kind of do. No, I hate them for other reasons. No, I love everybody. Spreading love. The Rainmaker. Anyway, guys, yeah, so it was in that fat programs, me and it's great. He's like, oh, so what's going on? Yeah, I dropped the kids at baseball practice. I'm like, I'm hungry. I have homework. Oh, darling, that's it's just ridiculous. I don't even think my parents were trying their best, but they dropped me off of this program. I don't think they knew it was all middle-aged and older women. Oh man, the trauma. In-N-Out Burger. Yeah, I got to get back over the 100-day moving average. Get up over, stare at the biggest, make it fresh. I can't tell what you guys are talking about. I'm sorry. Chicken does sound good right now. I love me some chicken. Let's see. You can 1, 1, 2, 2. Good. Push through the pain. What the hell are you guys talking about? I don't know, guys. It's been over an hour. I'm completely sick of this show. I've still got to supposedly do a NEO, SMCI. I might do a CRISPR. I've been telling people I might do a 10X. Also, guys, it's a huge speculative gamble, but I'm a really strong buy on UBX, Unity Biotechnology. They have a DME drug that is totally unique, totally novel, and I think it could be huge, but very, very risky, very, very risky. Yeah, not a lurker, of course, at a healthy weight. Never had to deal with the deal-a-meal cards. You just take your deal-a-meal cards, put them over here. Fuck you. Like an 8-year-old kid, I want a fucking wallet full of cards for what I'm supposed to eat. No, if you have some popcorn, just take 3 of your carb cards and put them over here, and when your cards are all done for the day, you're done eating. But I'm hungry. WTF. What if I'm still hungry? Like, my dad. Well, that's the idea. You're supposed to be hungry. You're fat. That's a blunt truth. Whoa. Nothing over here in Jersey. We're all hungry. Sean Markey, SRM Contracting. What day, time, SMCI video? Maybe tonight. I'm working. I really think that stock is going to go back to all-time highs. I feel market makers are setting us up. They're buying all the shares. Look at the narrative. They make such a big deal. The wife sold $2 million worth of stock. They own hundreds of millions of dollars worth of stock. Barron times the hit piece. Insiders, and that was like a week-old story. And they sold like less than 0.5% of their shares. They own literally hundreds of millions. They own a huge percentage of the company. They just sold a few shares to get some money to live on. Ridiculous. Anyway, guys, I got to run. Just got a few more things to finish up. I'll try to get back to an SMCI video, NEO video, 10X video, so many videos, so little time. Really appreciate it. I want to thank Alberto Berdiables. I want to thank the great Not a Lurker. I want to thank all of you for watching. It has been so enjoyable. I might do the SoFi Rock Opera tonight. It's just burning a hole in my head, and it's going to be absolutely terrible. So I might do it in the middle of the night when nobody's watching. Thanks a lot, guys. It's Un Poco Mas. Appreciate you. It's Cornbread. Peace. I'm out.